Today I'm gonna walk you guys through how I looked at trading on the week. Well, I'll do the last 3 days. I'll do and I'll go back Friday, Thursday, and Wednesday. All right, it's just past previous week. Okay, the week just before this Memorial Weekend. Happy Memorial Day to you guys, and I just want to show you how I look at price going in between fair value gaps, higher time frame fair value gaps, using this as the PD arrays to see where price is going, predict the most probability way price is going. All right, so I'll show you now. Up here I have layouts of the different time frames. So right now we're on the 4 hour, and this is showing you the 4 hour fair value gaps. I have the 1 hour, all right, where you'll see them in green. I have the 15-minute, where you'll see them in red, the 15-minute fair value gaps. And really, I don't do anything other than that, really. And then here is my 1 minute layout. But I'm going to stick to the 4 minute layout, and then I'll go down to the 1 minute time frame. So you'll see these 4 hour fair value gaps. I like the 4 hour time frame the best to give me directional bias, because in my opinion the 4 hour gaps you know give you the best read on price, in my opinion. Okay, daily gaps are really good as well, but you don't always get them, especially when price is a little choppy, as we have gotten this week. All right, so we don't really have any really valid unmitigated daily gaps, but we do have the 4 hour, as you see here. So on the left side is NQ, right side is ES. All right, and we use that with price alignment to see SMT, in which I will show you that as well. All right, so let's start with Friday. All right, so we're gonna go down to the 1 minute on both charts. Let's brighten up. And everybody, you should have a time frame, a time window that you specialize in. My time window is New York session AM. I like to trade between 9:45 and 11 o'clock. All right, most specifically the 10 a.m. candle, but sometimes you get that move a little earlier. All right, so we're going here now. First, as you see, these purple boxes, that's the 4 hour fair value gaps. Okay, so we've been bullish the previous weeks, so my bias was bullish until proven otherwise. Okay, so really all of my trades have been longs. All right, so what we see, all right. So what we see here, we have the first presented. Well, let's start with Asian range, as a matter of fact. All right, so we're gonna draw Asian range. All right, so we're drawing Asian range. So I like to see if we have expansion to one side, okay, and it's moving a certain amount of standard deviations. In this aspect, it moved like 4 standard deviations. I'm expecting even all the more opportunity for price to go up. Being that it expanded all the way down, it created equal highs up here. So if it took out the Asian lows, I'm expecting the price to go to Asian highs. Of course, you want to line it up with fundamentals, like say if we have a market crash. Of course, I wouldn't be looking for buys if we have a market crash. All right, but the reason price went down so much was because the tariff talk of 125% tariffs on the EU that Trump is trying to put on the EU. So that's why market sold off like this. But as you saw, we had a good bounce back, and let's show you why. All right, so it tapped into the hourly gap, the 4 hour fair value gap down here. All right, in which Price aligned the same way. Did the same thing on ES. All right. If we let's go to the hourly to show you this SMT. All right. So first off, you see that it filled the entire gap on ES, right? And on ES, it of course took the gap from the 12th. It took this gap, and the 12th here on NQ, it did not take it. All right, so that's a first sign of SMT that you want to look at. Of course, previous session, just also it could be just like 15 minutes before, an hour before, or previous days like this. So it on ES took out the 12's low, but NQ did not. All right, along with it filling this gap, and on NQ, this gap is pretty much unmitigated. Okay, it barely tapped it. So now we'll go back to the 1 minute from here. All right. Now you always want to see now on if price is starting to reverse, it taps into these high time frame PD arrays. Now you're looking for entry models. All right, but as you see, this is 9 o'clock now, not even market open. This is not my price window, okay, my time window to trade. So it goes here, it starts the buying program. All right, and then this new aspect that Michael Hudson goes over is the first presented fair value gap. All right, and this is on the 1 minute time frame. So at 9:33, we have the first presented here. Price shoots up, comes back to it. All right, and now the time window that I like. Okay, price now it inverts this fair value gap. All right, this is a good time to get in. Okay, but even a better time as far as what I like. Okay, now this is 11:15. Now we're in that 10 a.m. 4-hour candle. Okay, where you're gonna have a pullback here. You can enter right here during this when it taps into the first presented gap. Okay, once this next and then ride it up to these nice equal highs here. That's nice and juicy for 100 points. All right, it takes out those highs, and then and even goes higher. All right, it doesn't go up and fill this gap here, but this was basically the move. The move was the longs after finally tapping into the first presented fair value gap for a last time. Price goes up. Okay, which it aligns pretty well on the on ES as well. All right, let's move on. So let's move on to Thursday. All right. All right. So now you always want to look. You always have to look at first the Asian range. All right. Now in this, price expanded to both sides. All right. So we have the Asian range here. Price expanded to the highs. All right. We had some news where first price tapped into this fair value gap down, the 4-hour gap down here, and then shot up during unemployment claims. Thursday unemployment claims at 8:30. All right. So price followed the same thing. It did not tap into that gap. All right, but took out the lows. All right, took out Asian lows. Now when market opens, we have this first presented fair value gap here. All right, at 9:33 to the downside. Boom. All right, and then price inverts it, starts to go up. Now, like I said, 10 o'clock is the candle I like to trade. The 10 a.m. fair value, the 10 a.m. 4-hour gap. All right, the 4-hour candle. Right, so price goes back, dips back into that first presented fair value gap, giving you a nice entry right here. Your stops could be below the fair value gap here, which would have been 45 points. I really don't like to risk more than 30 points, so that's why I risk, and I went for these highs right here. All right, which was I call that low hanging fruit. All right, I'm not gonna risk all the way up here. All right, I risked right here, and it didn't take out the first hit, but came back down and took out these highs. All right, and I was pretty confident in taking out those highs, and that was the move for the day. And lastly, let's go to Wednesday. Okay, we're gonna go to Wednesday, which starts Tuesday evening. All right, so once again, we have the lows of Asian being taken out. Price goes down to this fair value gap and then starts to reverse. All right, pretty much same thing on ES. Now here, once again, we're going to talk about that first presented fair value gap. Now this happened pretty early. Okay, right there at 9:31, first presented fair value gap, and then I call this a cord of wood. All right, my mentor Steve Morrow, cord of wood, where price is just consolidating right here, and you see it's consolidating over this fair value gap. All right, now price takes off at 9:41, which I did not enter because I like to wait until at least 10 a.m. Okay, now we have this area right here. Now, I showed you SMT on Friday, from price taking out the lows of the previous couple weeks on ES, but not taking it out on NQ. All right, now price comes back to this first presented fair value gap. It goes up, comes down to the first presented fair value gap, and does not close below. It wicks below, but does not close, and starts to take off. All right, at 10:51, and right here it does not go all the way down here. It does not even take out these lows. That's SMT, and that's why I did not have my stop loss all the way down here. I did not have to wait for it to go down here because I'm seeing how price is reacting on ES. All right, that's why I have these charts up simultaneously. All right, it gives me a lot of information on what price wants to do. ES is made of 500 companies. All right, it gives you way more of a tell on the NQ's 100. So that's why I really like to have this up here. All right, price alignment. So, and as you see, I go for the low hanging fruit. Now, ultimate low hanging fruit would be Asian highs. All right, Asian highs would be low hanging fruit, but that would have been 41 points. When I'm looking for a move, the move of the day is going to be at least more than 41 points. At least if there was 50, I would have took it. But I got 72 points here. Now, what I want to show you, now price went up here. All right, so let's go over. Now that is Monday's highs. Okay, and which is a great example of just taking the low hanging fruit, because unexpectedly now price went up to these highs but didn't take it and never took it for the rest of the week, which is pretty surprising to me, because if it's going to come up here, I look at that as engineered liquidity. All right, they're engineering liquidity because you got relative equal highs from Wednesday to Monday. You're really looking for those highs to be taken, which I will expect that to be taken for at least the upcoming weeks. For it to not take that is very surprising to me. But you would not be having being up 150 points and then expecting and not trailing your stop and being taken out of this trade for break even. You wouldn't be doing that anyway. But nonetheless, I got 70 points out of the trade. I'm happy with that. All right. And hopefully you guys were happy with how I went over these weeks of wins. Although you can say we had some, choppy price action in a way. But price, although did move pretty well in between these PD arrays. You want to look at these higher time frame PD arrays to get a better outlook on where price is possibly going. When these PD arrays are holding up price, especially the 4 hour, you can tell that we're still looking bullish. And I really see us looking bullish for the rest of the week. Even amidst the tariff talk, we had bad tariff talk with China that turned out good. They want to work with us. I expect the same thing to happen with the EU. All right, so make sure to give me a follow, like and subscribe, and I'll talk to you guys for the rest of the week.